Data Merge is a members only online database where funders in the cash advance industry can share data on merchant accounts, enabling them to cross-reference and underwrite more effectively, ultimately helping to avoid potential losses. Data Merge is one of these systems that are out there that are used by everyone. And getting your when you get on data merge, I can't do anything about it because once you are on data merge, you are not going to receive funding. You just not. You got to get yourself off as a client. I cannot help them at all once they get on this. So once you're there, it's not a forever thing because sometimes the lender can, oh, I think it kind of caused, sorry about that. Sometimes the lenders who cross-reference each other, sometimes they will get ticked off at a client, and some of the real bad lenders put people on data merge and they shouldn't be because they ticked them off and they don't want them to go fund it somewhere else. When that happens, we help them get it off. But if I got 3 and 4 and 5 lenders telling me the same thing, it doesn't really matter what the client says. And a lot of times on these data merge, they'll say something like, the client will tell us, well, you know what, that was my sister. This actually happened with a healthcare. That was my sister. My sister committed a fraud with the government, and we've already gone through all that. It was her. Well, the problem is the government filed the paperwork against the sister and that person. So, all of this kind of adds up. We don't try to fight with the lenders who find something on data merge and the client disputing it because we know that it's pretty much a fact. Now, when we look at bank statements, we're always looking at the balance. So here's a January summary of a balance we see at the bottom of a bank statement in January. So you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. You got 13 negative days. There's only like 20 or 21 days, banking days in a month. And if you're negative 5 or more, you're just not going to get funded. What happens is we tell them they got to go another 30, 60, or 90 days without negative bank accounts. If they go another 30, and this was the only month they had a problem in, possibly we could get this thing done a month from now. But if I look at this with 13 negative days, I can tell the person they're going to have to go 90 days. There's no way somebody is going to let 13 negative days stand in that 3-month period that they're looking at bank statements. Here's the response I wanted to put down, add. This was from a client from just a few minutes ago. It's at 11:23. I was a little bit late getting on here, and I wanted to add this one to it. Paul sent me an email because I've been bugging him. This is a really big funding offer that we have. I got him the preferred funding offers, and they were great. And he said, "Good morning, Wade. You can close the file. We were looking for 3 to 5 year terms." I told the broker that. Well, if you do get an email like this, do me a favor and forward those to me so that I mean, he probably didn't tell the broker that, or the broker certainly would have called us, I would hope, or maybe not. They may have thought that I can do something that can extend times in our industry, and David talks about it all the time. They're going to be the maximum you're going to get is 18 months sometimes, and we have gotten a lot of them over the last month at 24 months. And if you get a 24-month offer, you need to jump on it and take it unless you're looking for that 100% prepayment discount, and then you take the 12 month. I had one just 2 weeks ago for 189,000. They got a 24-month. They chose that over the 100% 12-month deal because of the low cost of paying back over that period of time. Here's another thing that happens a lot. Got a couple agents that are questioning these transfer accounts. They say, well, no, they got $60,000 in their account. Well, if you're moving money from your cash management account, which is usually savings or some other type of money market account, and you move, or you can move it from one bank account to the other, transfers don't count but once. If you have 2 bank accounts and you've got transfers going back and forth, one of those are not revenue. And then even if you have a transfer on the other one and you transfer it again there, but to a second account, that transfer may be coming from that came in as revenue, may have come from a savings account. So none of this is counted as revenue. So all of a sudden, the $60,000 is $5,000 in revenue. The agent's not happy, but you just guys need to understand transfers. We have to look at everything that comes in and out of account. And usually we catch these. So me and Brad and our team will go call the client and say, okay, I need more explanation. I need you to give me copies of all these transfer accounts. And so what we do, we get it all up front, and then we send the transfer account in the with the funding paperwork, so that when the underwriter can see it, they understand it, and I'm not making them get back with us and say, "Hey, send me the more transfer account." But here are the 10 most common reasons for a decline. Number one is being declined in final underwriting. They found background information they're currently negative. That's most of the time that we get these background issues in their month to date. And or either they just accepted funding from a competitor. Please understand, this is the month of what we're in. We're in May now. When they submitted their bank statements, they submitted April, March, February, and if it's a California deal or one of those states that require 4 months, they had to submit January. But we don't know what they've done in the month of May. This is never a problem if it's the first week or so, but we're almost at the tail end of May. So when they do the bank verification, this is where they find the issues of negative bank account, or they just took funding someplace else. And background, there's only a few of the C and D lenders that do backgrounds at the end. And most all the reputable AB lenders, they all do. Matter of fact, not most, all of them do a background check right up front. So because they don't want to go deep into this with all the cost of underwriting without doing that. But then a lot of them that are C and D lenders, they look at it as, I'm not going to do any of that until I got a signed contract. Number two, the client does not own the business. It's fraud. That happens a lot more than you think, or they own the business, but they only own a small portion of it, and the other people aren't willing to put their name on it. Another one is online bank accounts. If you've got a Relay account or a Found account, any of these Lily accounts, any of these online banks, you can't do daily or weekly debits out of those accounts, so they're not going to be able to receive funding. Manipulated bank statements. We just got one of those just a few minutes. I looked at it, and it's God, it looks like great revenue. If I was the broker, I'd be very excited. But as soon as I looked at it, I said, "This is fraud." Every month starts with $15,000 at balance, but they're not subtracting anything out of their debits that they got. They got all these crazy numbers, and it comes out to 15,000. It doesn't come out to 15 till the last 3 months. Have all said 15,000. They didn't even do a very good job of manipulating the bank statements. Over leverage, and sometimes you don't know this until you do that month to date because they take another funding. But over leveraged, if they've got 3 and 4 different, or maybe even 2, but their debt income ratio is 35 and higher, which means that 35% of all their revenue is going to pay back these fundings. David talks about this all the time. Is this going to be debt, or is it going to be money that you can use to leverage your future by building your business? And then the final 5 is client refuses bank verification. This happens more often when it comes to clients that that you just don't want you to see that they've taken funding or that they've got these negative accounts. Now we do have legitimate reasons sometimes. Their banker tells them, do not give anybody your username and password. Hey, I get it. I'd be nervous too, but sometimes we can get over that by doing a screen share where the lender literally does an online screen share with the client or with the banker. It doesn't matter. But they refuse the bank verification. That's just not that often. Too many negative days. I've already covered that and showed you that. Time in business. We get a lot of brand new accounts coming in, and it's so sad that they have like 2 months in a row of 30,000 or more, but they only been in business 2 months. So that's sometimes an issue. Recently funded, we weren't told that they were. Now, if I knew that they were funded early, if they were honest with me, I could have conveyed that to the underwriters, and they would have looked at it a different way, but coming back after they had to find it themselves, it almost looks like they're trying to put that one by us. And they chose to move forward with us for $75,000 with the 100% prepayment discount addendum. David mentioned this the other day, but they accepted the offer. They took the 75, and that was on December the 23rd. All right. Well, listen, um, I just want to make sure everybody understands how the whole system works. I know you do because you're pros, but our lenders on the Bank Greasy platform, they all determine the client's funding amounts. It's never determined by us and what the factor rates are, and they do all that by assessing what the business financial health looks like through cash flow, and primarily they evaluate overall revenue as this produces insight into the business's ability to actually repay it. And then it talks about lenders also consider the length of time they've been in business, the industry type, what kind of existing debts or financial obligations that they may have. And ultimately, the funding amount is tailored to each individual business based on an awful lot of different factors. But the pro tip of the week is, people are asking, why is it that I submit a file, they're doing this amount, and I'm getting 25%, not even 50% of their monthly revenue? I want to give you some factors that come into play. Number one is the credit profile. If it's really, 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 really bad, or even not so great at all, and it's not extremely bad, that's going to determine how much that each one of these lenders are going to risk. Of course, the industry type makes a difference, whether it's trucking, real estate, or a healthcare facility. The number of positions is a big one, and we're going to talk about that in a few minutes. The number of deposits, we have one today. I'll tell you a little bit about on their deposits, and then of course what their daily balances are. When it comes to FICO score, if it's below 600, it becomes a higher risk funding for almost every lender out there. So they're going to take that in consideration when they're looking at the file to see whether or not it's going to be 100%. And here are some of the high risk industries that are out there, like transportation and trucking is probably number one. Real estate, seasonal tax preparation, where they don't do any other type of accounting. They just do it during that season. Consulting, when we don't really know what the consultants are doing, we have to get more information before we submit it to be able to get a better look. But if they're doing 50,000 or higher, that's okay. Anything in energy and solar, because these solar companies pop up and go out of business very, very quickly. Credit repair companies, especially if those companies aren't legally compliant with the federal regulations for them. Certain financial services, and of course, family farms. These are all high risk ventures. So that makes a difference in whether they're going to get 100%. Then the number of positions. If our funding is a second, third, or fourth position funding, which we do all the time, then all the other positions that are ahead of can really factor in what they really can afford to pay. So if their debt to income ratio on just the funding, not on all their other bills, is 35% or more of the total amount that they're doing in monthly revenue, for example, if they're doing 100,000 a month in revenue and 35,000 of it's going to pay back positions in the system, then that's going to create problems, and that's going to determine really how much they're going to be able to afford. And then, of course, number of deposits. A lot of our lenders, well, almost all of them require 3 to 5 deposits. The A lenders, they'll take a minimum of 2. Some of them require 5. And the reason you want that is because I had a situation today. Their deposit didn't hit for the month of April, but it went into the month of May, and the month of May is huge. But because it didn't hit in the month of April, they really could not. They only had like 11,000 in revenue, and they already have other positions, so they really for that month couldn't afford it. Fortunately, they have such high balances on a daily basis. It was able to cover all that, and it's not an issue, but daily balances is a big deal. A lenders like to have 1,000 in daily balances, but I want you to look at this. These are the May bank statement of a business that they were wanting to get. Let me make sure there's nothing to identify this business, and there isn't. They wanted to get in a funding of $50,000. Well, you're looking at their May bank statement summary. They